Friday, May 23rd. We may be sitting at Liberation Day number 2. We'll go over it. All of Trump's stuff that he just did, that he tweeted out. He is getting everything out before a 3-day weekend. Monday, the markets are closed. Just understand, if you have positions that you don't want to hold on for 3 days, close them. Remember, Trump at Mar-a-Lago, he doesn't like spending time with his family. So he's inviting VIPs over there. If they say something he doesn't like, it could be a market killer for that company, like Apple today. He's yelling at Apple. He's yelling at the EU, and it's bringing markets down. I've said it before. I think we are range-bound, okay? It's based on fundamentals, and it's based on Trump's wanting of the market to be a little bit better. The bond market will ultimately tell you what happens. But when you look at SPY, okay, understand the S&P is just, SPY is the S&P. Just take off that last decimal point. So 5,000 to 6,000 on the S&P means 500 to 600 on SPY. Where'd you get to just recently? 594. You were within a hair's reach of that one. He didn't like it. I mean, honestly, he didn't like it. He was holding his tongue for a large portion of this. But I think they want to bring the market down again. It doesn't mean that we're going to crash 20%. He's scared of the bond market. He is scared of the bond market. And when we look at the 10-year Treasury, again, look at the 10-year Treasury. And if we just go 5 days, it was signaling a warning. Okay? If we look at today, Treasuries at 7 a.m., they've gone from 4.5 to 4.4, but they're starting to shoot back up with the Twitter and the tariff stuff. Again, it is very, very likely that you've got to watch the 10-year to know when to get in. And if the 10-year is under 4.5, I think you could start buying. But the VIX also has to be below 20. And those are the two things that I personally am looking for. Does it mean that, next week your purchase is actually up? No. Does it mean a year from now that your purchase is up? Probably. I mean, again, you never know the future. Nobody knows what the market's going to do. But the reality of the situation is those are the two things that in my mind are key. Okay, he's yelling. He's absolutely yelling. Stock index futures fall sharply as Trump threatens tariffs on the EU and Apple. So essentially what he's yelling about is that the negotiations with the EU are not going well, or they're not talking. Again, you don't know who to believe. Remember when they said they were talking to China, but they weren't talking to China? But starting June 1st, he's slapping a 50% tariff on the EU. Expect retaliation. Remember, we import cars and goods that have like a 3-5% margin on them for the EU. But what we export to the EU is largely services. So expect, and they have huge margins. So they are able to throw significantly more tariffs on our goods. Nobody wins in a tariffs war. Nobody wins in a tariff war. But there was good news yesterday. The good news is the Supreme Court preserves Fed independence. They told Donald Trump he can't fire anybody at the Fed. But other agencies, he's perfectly fine. So the Supreme Court took that off the table. A constitutional crisis and issues with firing Jerome Powell, it's off the table. It's absolutely off the table. Okay, one of the things I want to start out with is TrendSpider. You've got to know your charts. You've got to look at these charts, because the one thing that you know in this market is the charts. So I am writing a newsletter, by the way, this weekend for the education section. So if you didn't know, and it's on the website, The website is key because on the app you could type in education, but I'm not sure it gets you there. But if you go to just open up a browser on your phone, go down to education, and there's a long list of education. I am writing an education newsletter, and it's going to coordinate with this one that I wrote in January. What if I lost everything today? And I had to start over? How would I relearn everything I know about the markets? A 5-week process. Excuse me. I need to clear my throat. But this one will be step 2 in this process. It will be learning fundamentals and technicals, and specifically which ones I want to do. But there are tons of good education materials in this. And one of the things that I typed out about 30 times last night was all of these things don't matter. The only thing that matters is price. And in charts, what do you see? It's just price. So I want to start out with this because there's also a game changer in TrendSpider. First off, if you're not understanding charts or you're not looking at charts, get a free chart software. Okay, you don't need TrendSpider. I had this discussion with a few people over the past couple of weeks. TrendSpider is a tool that allows me to make more money than I would if I didn't have it. There are tools in here that I use that I can't get other places, specifically backtesting, specifically the 4-hour algorithm, specifically the scanner that allows me to scan and find opportunities. Okay? And they're adding one. See this little explain down here? Okay? They are launching a new large language model called Sidekick. Now, I've only played with it for yesterday, and all of that meant about an hour. It's game changing. It is in beta. It's not available to the public. I have early access. It's a very small audience. And yes, there are issues with it right now. There are several mistakes that it's made for me already, but it's getting far better. The hour that I spent with it, holy crap. You will get access to it over time. It is so much cooler than the things they've launched. Basically, this explain button will go and explain the performance results of this backtest and show you ways that you could do it better. It is unbelievable. So it takes the 4-hour algorithm and says, hey, let's do this. Let's do this. And say you find a government, and you want to put it up on the chart. You ask Sidekick, hey, can you put this on the chart? It does it. It's amazing. Amazing. And TrendSpider is having a sale this weekend. Go over to the link tree, linktr.ee/daily stock pick. Get it. And they do have $7 trials. So here's what it is. For 14 days, you've got a 3-day weekend. Go and sign up for a $7 2-week trial. Okay, you don't get my 4-hour algorithm. You don't get my tools, but there are plenty of tools for you to import and to try this service out. Now, if you don't know technicals, maybe the newsletter that I'm typing out for the weekend, telling you which technicals to go learn, you can learn it in a weekend. Absolutely. Will you become an expert? No. It's like golf. You can go and learn golf. You can go and learn how to swing a club in less than an hour, but you ain't going out and winning the U.S. Open in less than an hour if you just picked up a club. So go and get a 2-week trial, understand what it is, and just see it. And there are tools that I use, Seeking Alpha and TrendSpider. I don't need those to make money in the market. But A, they save me time. B, they actually wind up saving me money because I don't do dumb shit. And that's the whole key. And you want to know why? Because I'm an investing expert. Yes, the podcast is out. Investing Experts, get it on Spotify, get it on Apple Podcasts. It is the Seeking Alpha Investing Experts podcast. It's about 40 minutes long. Rena and I talk about everything. From financials, how I use fundamentals to pick stocks, Tesla stock, it was a big one, owning Bitcoin, and top stock picks. So go and do it. In fact, In fact, I did get a price alert on a top stock that I have talked about on this podcast. It's insurance. Go and find it at Top Stocks right here in the bottom left corner if you have Seeking Alpha. I will caveat all of this. I am not an investing expert, even though the podcast is called Investing Experts. I am not. I'll give you an example. I said yesterday that bond rates jumping and it was going to bring the markets down. It didn't. The market rallied yesterday. I mean, if we just look at a 5-minute chart of SPY, okay, and we'll take this one. The markets didn't crash yesterday like I thought they were. They rallied up. And then in the afternoon, you saw that sell-off. Did it know about the tweets? You can see when the tweets came in. But again, I am not an expert. And even though I'm on the Investing Experts. U.S. Treasury yield stabilized on Thursday after soaring on Wednesday as traders dumped bonds amid concerns over the new tax bill's effect on ballooning U.S. fiscal deficit. After a heavy sell-off on Wednesday, markets began to stabilize again over the last 24 hours. Again, they stabilized despite investors' ongoing fears about the fiscal situation. One factor helping U.S. assets to stabilize, while some stronger U.S. economic data, which continued to point away from a recession. Okay, economic data helped us out yesterday. Let's just go over the cycles that we've been in. Okay, January and February, boom times. Animal spirits, Trump administration will get everything they want done and markets will fly. This is the timeline. March and early April. Oh my God, the recession's coming. It's probably a depression, deflation, financial crisis. Trump administration has no clue nor do they care about the stock market. Trump is going to fire Jerome Powell and we may have a constitutional crisis. That's March, early April. Okay. Then we enter late April and early May. Hey, tariffs are off. Boom times again. Trade deals are getting done, and the Trump administration's worry about the bond market is going to make everything okay, and the stock market will be fine. The recovery is just starting. And that was up until yesterday, Tuesday. Now, hyperinflation, debt spiral. The bond market is signaling the economy is out of control. The deal struck in the House is going to spike inflation, and the debt will get out of control, and nobody cares. That's it. What's the thing going to be next month? Is it going to be a recession? Or will everything be okay? You are in news cycles. FYI, we are 5 months into a year. And I just went over cycles that would normally take, 9-10 years. And this is Ray Dalio signaling why there might be a severe bond crisis. I'm not trying to scare you out of the markets. I still think you should be in the market. I do think that keeping an eye on these charts and having a strategy like my 4-hour algorithm is key. We have been up there. I said short term, the MACD is extended 14 points above the oscillator right there. The RSI was at 75 on QQQ. We were overbought. I'm not saying that Trump saw that, but he said, hey, it's not a bad time to crash the markets. Okay, and this little clip from Ray Dalio, it is great. And Samir said, hey, buddy, it's AI generated. No, it's not. It's on Ray Dalio's freaking Instagram. So it's not AI generated. It is Ray Dalio. Now, one thing I want to point out, I almost brought up Fannie Mae yesterday and Freddie Mac because in the newsletter on Monday, I said YOLO trades, the FNMA, FMCC, to follow Bill Ackman. It was way up on Monday. Well, yesterday, it went absolutely nuclear. Trump suggested it in the morning. Let's just go and look at the chart. Because you had a chance to buy this one. It was up 50% yesterday. 50%. I'm going to turn on after hours so you can see it. Because yesterday, had I brought it up at $10 in the morning, It wasn't there. But if you go back to Monday, where I brought this one up, way back here, okay, that's, what is it, 23rd today? Let's go back to Monday. Let's see, 16, 19, right there. Right there. I mean, I backtested. You can see I was backtesting it to see where the volume levels are. It was at $6. You got to $10 yesterday, almost 12. So, and you round tripped. Today, I'd expect it to have some weakness. But again, it's YOLO trades. Congratulations. I try not to bring these up too much because I'm not taking these trades. But congratulations, because I got some comments from some folks that they actually took the trade. Congratulations. It was up 50% yesterday. Okay. And again, it's in the newsletter. That is 100% free. It was out there. So don't tell me that I'm only doing this for paid subscribers. That is 100% for free. And the reason I don't bring this up, I don't want people thinking that I'm taking these trades. The podcast is about my morning ritual and what I see. It's up to you to decide if the risk is worth the reward for yourself. Kudos to those people that took it. Kudos to those people that took the We Ride, WRD. Okay? Kudos. As the one, I did say the other one that kind of skyrocketed, I said it, and you can see it. Let me see. I think it's in the earnings one. Let's go down to earnings, because once I commented on Google, and then we go down here, there's the education section. I mentioned WRD on Monday. I didn't buy back WRD. But again, if you go back to the Monday one, I mentioned WRD, and this was Seeking Alpha. This wasn't even me. Advanced Auto Parts. Okay? Advanced Auto Parts, if you go to a 5-minute chart from yesterday, this was up like 60, 70%. It's a short squeeze. It is a short squeeze. Okay? This one was great earnings. I mean, we can go and look at it. I didn't prepare it, and I'm not going to put it in the newsletter, but AAP is the symbol, just so you know. Up 57% yesterday on good earnings. It's down 30% over 1 year. It's got a buy in the quant. It looks strong. It's number 2 out of 22. You know what else is reporting next week? AutoZone. Look at AutoZone. It was down. Is this one something over 1 year? Advanced Auto Parts is down 30%. This one's up 39%. And it doesn't have the short interest. Is it ready to pop? I don't know. But again, at the beginning of the week, I said Advanced Auto Parts and We Ride would come out. I thought those were two good picks, and it was from Seeking Alpha, and it's from their Catalyst Watch. And it said, hey, options market is signaling this. I loved reading that at Friday, 3 p.m. The Catalyst Watch article comes out, and you can read all about it if you have Seeking Alpha. And I suggest the bundle here. Okay, the bundle is both premium, which gets you the quant rating, which you just saw, AutoZone and those things, the quant rating, and then Alpha Picks. Okay, Alpha Picks is a data-driven portfolio with where you buy a stock on the 1st and the 15th. They tell you exactly why they're buying it. They go over everything from the fundamentals, and they sometimes include some technicals as well. But they also tell you when to sell, and the actual performance is what outpaces the market. The S&P during the same time period is up 57%. Alpha Picks is up 162%. Now, it hasn't done well over the last 6 months, but Steve Kress wrote a great article a few months ago. Hey, Alpha Picks is not outperforming the market like it usually does. We're in a bear market. It will underperform, but it will outperform on the recovery. So that's the key. That's why you have Alpha Picks. And if you don't want Alpha Picks, just go and get Seeking Alpha Premium. Very likely, if you had invested in FNMA, if you had invested in We Ride, if you had invested in Advanced Auto Parts, you would have paid for your subscription to Seeking Alpha. The key is when you only get premium, you get a free 7-day trial. So before you even go to the bundle, you could go and get premium. All of this is available on Linktree. There are 3 links right there in a row. Okay, so again, the newsletter, completely free. No reason not to sign up for it. And a free 7-day trial on Seeking Alpha Premium. Now, we've got a decision time, and I put in my notes. These Mag 7s may determine the direction of the market. These are what's called bull flags, okay? And so you can see right here, Nvidia, Tesla, Meta, Amazon. Do they break above? Or do we continue a trend down? Because these things are usually fairly good. And there's so many stocks that look good now. The problem is, again, we are in a market where a tweak can take you down. We know the direction of these now. So when you got a stock like Nvidia in that little bull flag market and it's down 2% at 129 and you have earnings coming up next week, and it's most likely good. I like it. So for me, I like it. I'm holding my position. If we get down closer to the 200-day, down around 122 today, I may start adding to my position. Yes, the 4-hour is a great tool. It wins 57% of the time. And I usually do add when it gets to that 2-hour. I've got a large position in Nvidia. Is it one of my top 5? No. But it is definitely 6 figures. It is a very large position. I am holding it. Some of those are held at 140. I believe it's a $160 stock. So again, look at that. Now, I don't do, one of the things with Nvidia, yesterday, NVTS was up 139%. Okay, and Shai Bular has this in his portfolio. I do not do deep dives like this on stocks. I don't know this much about the stocks that I own. Shai does. And so he does elevator pitches. He isn't selling based on just that pump, even though I would probably be taking profits. Again, when he knows where he's going to sell or where he's going to trim. When he gets into these stocks, he knows what they're worth. So I go and read this one if you'd like. And if you'd like to invest in NVTS, it was up 140% because of their partnership with Nvidia. And I've got to say, after reading this, I may be as bullish as he is and even buy at that $4 range. Now, to go with yesterday's analysis on Apple, what was Johnny Ives working on that was worth $6.5 billion? Okay? What will the device be? There was all sorts of stuff. But there was one analyst, Apple analyst, that came out, and the Wall Street Journal did a thing. It's a device. It's going to be a third device. It's a companion device to the iPhone and the MacBook. So you're going to have your iPhone, you're going to have this wearable device. Is it a danger? I don't think so. We've seen this with the Humane button, which went out of business. Nobody bought. Are you going to want to upload every discussion and everything that you do to a company like OpenAI? I don't mind my stuff going to Apple. I know they're protecting it, and yes, there's a risk. But to OpenAI, that's like giving Google access to your entire stuff. And yes, they have access to my email. Yes, I use their services, and I'm not particularly worried about it. But again, when push comes to shove, which company do I trust the most? It's Apple. The problem is that if OpenAI is able to get their own device, it might affect services revenue for Apple. That's the bad news. The good news is that this companion device might need more compute power. And so you may actually be pushing an iPhone upgrade cycle. Apple may be actually able to do a device like this, okay, that they design, and they may be able to do it better. So that's the key. That's kind of the thing. I wouldn't count Apple out. Either way, I think Apple has a hard road ahead. It's hard to unwind my position right now. And Apple's crashing. It's down 3%. I mean, that's just on Trump's news. He wants a $5,000 iPhone. I mean, that he is building all over India. Yeah. And FYI, he contracts to India. You know, it's Foxconn that does it in India. It's not Apple. And if there were a manufacturer here in the U.S. that they could contract with at a similar price, they'd do it. But again, Trump wants to push that price up. It will be more expensive if you do it here. So I was looking at CNBC yesterday, and Josh Brown brought up EQT as his new best stocks in the market. This is interesting. Joe Terranova had it. He said support will be at 52. We'll look at the chart because it's over resistance. He thinks you can watch it for a pullback and then to move higher. They've had a 31% revenue growth. It's the second best energy stock in the S&P this year. It's trading up year to date in a market where natural gas is actually down. You can see year to date it's up 20%. Has the move been done? Well, look at the 52-week range. Okay, you're at 55 right now. The 52-week high is 57. So you don't have much upside. Wall Street thinks that it's a $58 stock. That's only 5% from where you are now. So does it have room to move up? Well, look at the actual, the factor grades on this one with the quant. The quant says it's a hold. It's been a hold forever. Okay, its growth, fantastic. Profitability, fantastic. Momentum, fantastic. Revisions, analysts love it. The valuation is the issue. It's expensive. And again, at that 52-week high, it's expensive. So let's go down a rabbit hole here. Let's find a little bit better one. Okay, I'm going to let you do your own research, but let's look at ranked in industry. Because this is a natural gas stock. Remember, he's saying we're going to go look. Let's look before we go there. Let's just look at EQT, the chart. I mean, this is how you do it. If I just say, okay, I heard Josh Brown say 52 is an old support. Let's just put a level of 52. Is there something in that 52? Well, maybe. Let's look at a weekly chart. Let's look at this one right here at 50. Okay, you had your double top. And you're sitting there at resistance levels. And your MACD is a little bit high. And your RSI is at 63. Do I think there's an opportunity? Well, my 4-hour algorithm doesn't trade this one really well at all. And when I look at that 51 and 52 kind of range, yeah, it did break out above it. And it's trading at 55 now. But the MACD's coming back down. Now, typically what stocks will do is they will capitulate at this one. It's a very well-run company. Okay, I know this because I've watched this stock ever since like the 20s, I think. And I didn't get into this one. So full disclosure, I'm not in this one, and I'm not planning on getting into this one. But if I had to pick, I would want to go over here and say, okay, EQT and Seeking Alpha. It's ranked number 18 of 71. You can analyze it with the AI analysis. But you know what? Number 1 is EXE. And yes, it's a natural gas stock in the Appalachians. You want to know how I know that? The company profile down here. I read it. And I looked at it. See how it's up there? It's at 114. 52-week high is at 116. But it's not valued as high, going forward as EQT. It's a strong buy in the quant. And we can look at it and say, okay, why is it a strong buy? And when did it get it? Let's see. When did it get a strong buy? It got here at 110. I'm sorry, 108 is where it got there. So you're at 114 right now. Could it go higher? Well, analyze with AI. You can do all of this in Seeking Alpha. Again, they're competitors, Chevron and Devon. Maybe they have better tools. And you can look at concerns raised by Expand Energy's valuation may be fairly priced at current natural gas prices, with the risk of demand destruction if prices exceed $5 MCF, potentially leading to cyclical downturns. You can read all about that. Okay, or you can read about the positive, projecting to generate close to $2 billion in free cash flow and potentially over $3 billion. You can read that. You can even read why each sector is graded what it is. EXE presents a challenging valuation landscape. Its PE of 40 is significantly higher than the sector, indicating that stock is expensive. However, the PEG ratio is 0.34. That factors in growth, suggests some level of underpricing compared to the sector median of 1. So again, I'll let you do your research. Full disclosure, absolute full disclosure. I own and still love MPLX. And this one isn't at its 52-week high. It's down from 54. This one does the same thing. It's ranked number 9 of 52. But the yield is 7.6, so it provides me a great one. Full disclosure, go and do your own research. But I thought that when I saw that on Josh Brown yesterday, that's the process that I went and did. That's the process that I am showing everybody with the tools that I have. The tools that you have, go and do your research. If you don't have the tools that I have, that's fine. Just find a way. You know, I was on Spaces yesterday. And Stock Talk was going off about, you know, you need to do this, you need to do that. Well, the reality of it is people come to me with, hey, have you ever seen this indicator? Like Ichiman Cloud, whatever. Somebody said, hey, you know, have you ever done the clouds? Yes, I have. I've tried it. It wasn't for me. I've developed my own system. Develop your own system. So that's how you do it. And if you don't like the tools that I have, go and find yourself some tools. But understand there's an absolute process that you should follow. Now, nuclear names. They're surging. Is it too late? Well, let's go look at some of them, okay? Because Shai Bular says OKLO, SMR, CEG, Vistra, NNE, and CCJ. Let's go and look. Let's go and look at OKLO first. Let's see, is this one at a 52-week high? Because we know they're going to pop when Trump signs this thing. It's in the middle of its 52-week range. It's trading right now at 44. It goes up to 59. Yes, it's expensive, but you're trading this for the trade. So if you want to go over here and use some of the moving averages and find a better way, 22 was the way to get into this one. 22. Because the 4-hour algorithm said, hey, the MACD's down low, the RSI is relatively low. That's an opportunity. So OKLO may provide an opportunity. Let's go and look at the second one, SMR. Okay, this is New Scale Power. Is this one? It's at the top of its range. It's not huge. At 28, it goes to 32. That would be a good move on a pop. Yes, they surged 10%. They're up 10% in the pre-market, and they were up 6% yesterday. Find an entry, SMR. You know, these are all catalysts that will push it higher. Well, 16 was the way to get in. The 4-hour algorithm told you it's 16. This one trades fantastically on the 4-hour algorithm, making you 478% versus 203% if you bought and held. So again, if you're into nuclear, let's go look at another one. CEG, Constellation Energy. This is a great one. I've brought this one up before. It's not its 52-week high. Yes, all of these are expensive. You are paying because what's the new gold? It's energy in the AI space. So you're going to pay for these. Now, CEG, it's got a good dividend. This is a great company. Where could have you gotten in? 210 right there on the 4-hour algorithm. This one trades perfectly fine on the 4-hour algorithm. In fact, you've got a gap up here that most likely gets filled at 343. And yes, it's expensive. VST, same thing. It's expensive, but it's not at its 52-week high. Nano Nuclear Energy, yes, it's expensive, not at its all-time high. Now, the best one, I talked to a nuclear expert on Spaces one time. I think it was Sam or somebody. But I said, what's the one that you would buy? It's Camco. Camco, whatever, tomato. It's expensive. Wall Street thinks that it's worth 59. 12% upside. What is 52-week high? 62. So on a pop, you could get this one moved. Yes, it was up 1% yesterday. Yes, it's up 5% today. This is a company that actually does mining. Okay, they do mining for lithium or what? I forget what it is. What's the nuclear one? Whatever the thing is. Again, energy's not my thing. I would be playing these for pops because Trump is expected to sign an order to boost the industry in this country. That's huge. So again, I may be buying a nuclear name today because he may sign it over the weekend. So big banks, I have been very clear. I have banks as long-term investments and swing trade positions for the second half of this year with deregulation. Big banks explore possibility of issuing joint stablecoin. This puts the big banks into crypto. And you know who's the number one, quote unquote, bank that's in crypto? It's Robinhood. It's down 3%. I am looking for an entry into Robinhood. If you think those big banks are doing things crazy, just wait. Robinhood says, hold my beer. These guys are going to get into the stablecoin market if the big banks get into it as well. They will find a way. The management is good like that. Is it expensive? Absolutely. You are at your 52-week highs. I don't want to buy this at 62 when the 52-week high is 66. I want to see, again, Robinhood CFO sells shares, $3.1 million worth. Is that big? Hell no. Hell no. These guys own a ton of stock. So even though it's $3 million, that just means he's putting a pool in his backyard, for the summer. And he needs to get it done quick. That's it. That's it. Again, there are opportunities in this market. You are heading into a 3-day weekend. Identify what's in your portfolio, identify what's safe and what's not. Because I've said it before, when you look at SPY and you look at the S&P, I think we are range bound. Doesn't mean that we can't go up, because look at that weekly. Okay? But there's not a lot of volume up here. It's not like people are pouring in. People are very comfortable here between the 300 and 450 level. They're not selling. But you're seeing a lot of people probably going to be able to take profits like they did on Liberation Day. Don't be one of them. Okay? If you have positions that you bought up here and you want to protect them. But you should have known that when you got into them. Am I going to be selling my VOO that I bought 2 weeks ago? No, I identified it as the potential that it's going to be for a year or longer. So, Fire Tip Friday. This is Financial Independence Retire Early. I don't agree with all 8 of these, but Ryan says, this year a new client earned $350K, told me I'm doing everything right with my money, but I'm not getting ahead. That conversation confirmed what I've seen for 12 plus years. High earners follow outdated rules that sabotage wealth. Here's 8 actual rules that work. Okay, 1, static money is dying money. If you've got $100,000 in the bank, and yes, I have cash, but it's in a high 4% earning money market, it is just there for buying opportunities. Okay? I don't let it sit there very often. It is there because we're still in this range, and I was waiting for a pullback. I will most likely start making that money work for me. Number 2, buy back your time. Again, spend money on things that you would normally do, but you don't want to do. Rule number 3, earnings beat savings. And by the way, that buy back your time, that is paying for TrendSpider and that is paying for Seeking Alpha, because I used to spend an exorbitant amount of time on FinViz dealing with, okay, let me go compare the PE on this. Let me go compare the PEG ratio with this. I can do it all in Seeking Alpha, and I can look at it in 5 minutes and I know if I want to actually invest or not. Whereas it used to take me at 15, 20 minutes on FinViz to actually collude through that stuff. So buy back your time. Earnings beat savings. Earning, again, making more money is a far better way than saving. I don't agree with this one. I think you can save and earn more. That would be my thing. Job security is myth. Absolutely. Debt is financing quicksand. Absolutely. Think in half decades, 5-year terms. Absolutely. Avoid day trading. Yes, to a certain extent. If you have this skill and you can find A+ setups, Absolutely. Studies show that 95% of day traders use money. Yes. If you are risky and don't have a plan, you will lose money. And FYI, when you start day trading, you will lose money. Just make sure it's not life-changing money. He says, I've never seen a single client build sustainable wealth through day trading. I have. It's that 5%. So if you have the mindset, you have the ability, and you want to build it, again, I don't think this is an absolute rule, but rule number 8, money is meant to be enjoyed. Yes, I have problems with this. I enjoy my life, but I probably don't spend as much as I probably should. It is what it is. Now, I did a newsletter this back in January. What if I lost everything today and had to start over? It is in the education section. I think I went over this at the beginning, but it's in the education section. It's a 5-week step process. I am working on a one this weekend. What if I lost everything and had to start over? Part 2, mastering technical and fundamental trading. It's a second part to this article that happened in January. So it will be, I'll give you 7 days and I'll give you an easy way that I learned to master technicals and fundamentals. It's super, super simple. Fundamentals, the way I look at stocks, you can learn that in less than a day. Technicals, the way I actually look at stocks, you can learn that in less than a day. It doesn't mean you're going to master it in less than a day. I've got 40 years of actually trading and investing in the market. So I know what I like, I know what I'm good at, and I know where to focus on. If you're new, it's going to be longer than just a day for you to master it. But to learn it and to learn exactly what this stuff is, it won't take you very long. You just have to know. And what I'm trying to teach you is the way I look at things. And the only reason I do that is not because I'm an investing expert, even though I was on a podcast that is investing experts. The reason I do that is I have seen some level of success. And I think some people can learn some things. And the messages that I get from everybody who listens to the podcast is, I've learned so much from you. This is not something that is life consuming. I had a job while I was doing this. So did I do it as in depth as I do it now? No. I do a lot of this stuff for working on the podcast. But my actual investments, they don't take a lot of time. I have a plan and I do it. And by the way, the 3-day weekend, you damn well know that I'm going to take an hour or two this weekend to look at charts, to understand fundamentals, to find opportunities, and create more enhanced watch lists. Those 5 that I gave you on Wednesday, I'll probably whittle those down to 2 this weekend and say, you know what? I really want these. So have a great weekend. Enjoy your barbecue. Expect some newsletters this weekend. Catch up on everything. Don't fret, because I think we may be going into Liberation Day 2.0, which is an opportunity. So if you want to sell things because you're not sleeping at night, that is absolutely okay. Just understand my risk tolerance. I think it's an opportunity. So if you have any questions, hit me up. Again, the TrendSpider sale's going on. You can sign up for anything that you want here on Linktree. Everything's here, even my email address in the upper right-hand corner. Have a great weekend. I will talk to you Tuesday. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success.